your roadmap to the latest in auto. Welcome to Highway Herald. The global economy is shifting, and at its core lies an intense trade war between the US and China. This isn't just about tariffs, it's a battle of industrial disruption, political strategy, and economic power that could reshape industries. As China counters with its own measures, the US faces mounting pressure, especially in automotive, tech, and agriculture. What does this mean for businesses and consumers? Buckle up as we break down the 7 biggest consequences of this escalating conflict. Number 7. The US auto industry buckles under rising costs. Few industries are feeling the squeeze of this trade war quite like the automotive sector. With the US imposing 25% tariffs on steel and aluminum, automakers are grappling with soaring costs. These metals are essential in vehicle production, and as their prices climb, so do manufacturing expenses. Industry giants like Ford and GM have already issued warnings, cautioning that these financial pressures could lead to job losses and higher vehicle prices for consumers. The auto industry is already navigating a complex transition to electric vehicles and battling ongoing supply chain disruptions. This trade war only amplifies the challenges. But that's just one side of the equation. In retaliation, China has imposed tariffs on US auto exports, dealing a severe blow to American manufacturers. Companies like Tesla and Ford, which have aggressively expanded into the Chinese market, now face significant hurdles. The crucial question remains, can US automakers adapt, or is their dominance slipping away? Number 6. Tech sector in turmoil. Supply chain disruptions mount. Silicon Valley is in the crosshairs of this escalating trade war, and the stakes couldn't be higher. Many critical components that power American electronics, semiconductors, lithium-ion batteries, and advanced materials originate from Chinese suppliers. With tariffs driving up costs, major tech firms are scrambling to diversify their supply chains. Apple, for instance, has started shifting production to India and Vietnam, but the disruptions are far from over. China isn't backing down. In a strategic countermove, Beijing has begun restricting exports of rare earth minerals, essential elements used in everything from smartphones to EV powertrains. Without these resources, American tech companies face severe production slowdowns, rising costs, and a potential loss of global competitiveness. This conflict is more than just a short-term economic hurdle. It's forcing a fundamental restructuring of global manufacturing. Will this trade war dethrone China as the world's production powerhouse, or will US companies struggle to adapt to this new economic order? Number 5. US agricultural exports take a major hit. For American farmers, this trade war is a full-blown economic crisis. Once the dominant buyer of US soybeans, pork, and agricultural goods, China has pulled back, slamming American farmers with retaliatory tariffs that have effectively shut off a major revenue stream. Key agricultural states like Iowa and Illinois are bearing the brunt of this fallout, with billions in exports vanishing overnight. And the damage doesn't stop there. China is actively cultivating alternative supply chains, turning to Brazil for soybeans, boosting its own pork production, and pouring investments into agriculture across Africa. This means that even if a trade resolution is reached, the US might never fully reclaim its former market share. With mounting financial strain and rising political pressure, will Washington be forced to soften its stance on China? Or has this trade war permanently altered the landscape for American agriculture? Before we delve deeper, we'd appreciate it if you could subscribe to Highway Herald. Your support fuels our passion to create more content like this. Now let's explore number 4, the currency war, a battle between the Yuan and the US dollar. Beyond trade tariffs, this economic standoff is unfolding in the currency markets. China has been strategically devaluing the yuan, making its exports more competitive while softening the impact of US tariffs. Meanwhile, the US dollar continues to strengthen, unintentionally making American goods more expensive and less attractive on the global market. But currency manipulation is more than just an economic tool. It's a calculated move in a much larger geopolitical battle. If China continues to let the yuan slip, the consequences could be far-reaching. Inflation spikes, increased volatility in stock markets, and potential retaliatory financial policies from Washington. With uncertainty looming, investors are bracing for turbulence. The critical question remains, could this trade war trigger a full-scale financial crisis, or is this just another chapter in the ongoing US-China economic rivalry? One thing is certain, the stakes are higher than ever, and the ripple effects are only beginning to unfold. Number 3. The global trade shakeup, new winners emerge. As the US and China clash, Other nations are stepping up to claim a slice of the global manufacturing market. Countries like Vietnam, Mexico, and Malaysia are drawing in businesses looking for alternatives to Chinese supply chains. Meanwhile, energy suppliers from Russia and the Middle East are strengthening their ties with China, further reducing Beijing's reliance on U.S. resources. Europe is also leveraging this situation, forging stronger trade alliances with both the U.S. and China. These shifts could permanently alter global commerce, setting the stage for a long-term economic standoff between Washington and Beijing. For businesses and consumers alike, this means adapting to new trade policies, navigating shifting supply chains, and preparing for an unpredictable economic future. Will these emerging markets successfully challenge China's manufacturing supremacy, or is this merely a short-term adjustment? Number 2. Political crossfire. How the trade war pressures Washington. This trade war has evolved beyond economics. It's now a high-stakes political showdown. China is deliberately targeting industries that hold political weight in the U.S., focusing on sectors like agriculture and manufacturing, which are vital to key voter regions. By imposing retaliatory tariffs, Beijing is pressuring lawmakers whose political survival depends on these industries, creating economic distress in critical swing states. As election season approaches, U.S. politicians are being forced to take a definitive stance. Will they escalate the economic standoff, doubling down on tariffs despite rising costs for businesses and consumers? Or will Washington push for a diplomatic resolution to restore stability in global markets? The outcome of this trade war will have lasting implications, not just on trade policies, but on the broader balance of economic power. The next moves made by U.S. leaders could define America's economic trajectory for decades to come. Number 1. China's strategic play, a long-term plan to sideline the U.S. China isn't just responding to U.S. tariffs, it's actively reshaping global trade for the future. Through the Belt and Road Initiative, China is forging strong trade networks across Asia, Africa, and Europe, reducing its reliance on American markets and diversifying its economic partnerships. At the same time, Beijing is strategically pushing for broader global adoption of the yuan, directly challenging the US dollar's supremacy. If successful, this shift could upend the global financial system, diminishing Washington's economic leverage. The critical question remains, can the US counter China's long-term economic ambitions, or are we witnessing the rise of a new global financial order? The stakes have never been higher, as both nations battle for long-term dominance in an evolving economic landscape. Final thoughts: a changing economic landscape. The US-China trade war has evolved into a high-stakes battle for economic and geopolitical control. From rising vehicle costs to shifting global supply chains, its impact is undeniable. China is aggressively securing its long-term position, while the US faces mounting challenges in key industries. So what does this mean for the future? Will America regain its industrial strength, or is this the beginning of a new economic order? Drop your thoughts in the comments, and don't forget to subscribe to Highway Herald for the latest updates on automotive and global trade news. Thanks for watching. We'll catch you in the next one.